Good afternoon. Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. So this is day 3 of 2016, another day of selling. As we pretty much limped into this year with the last few days of 2015, lots of sectors were below their moving averages. Lots of names were already obliterated. Lots of sectors, almost through lows of the year, and then, some of those high beta names got hit. So it made a little bit of sense to, take a little bit of a back seat to see what would happen. Because in the first 5 days, a lot of things go on. Sometimes you get new flows that push the market up. Sometimes, they sell the winners that have been holding the market up, which pretty much happened. And, here we are, day 3. I think the Nasdaq's down 4%. The S&P and the Dow are somewhere around 3%. And, it doesn't feel like it's over. Yes, we're oversold. Today, there was a little bit of a buyable spot on the open, and then it was just a little back and forth mess, done by computers. Hopefully you're a member of Redler All Access, because I send a note out every day with levels and some thoughts, and a lot of those levels and thoughts are working out. Unfortunately for myself, I've been pulled in so many different ways. I'm not taking advantage of it the way I should, and again, that's something I'd like to change. But anyway, at this point, it is what it is. Okay, you've had 4 down days of selling, so it's hard to probably be short here. But in the same way, we don't necessarily have to bounce. Because to me, it feels as if, in the chart I wrote this morning, I said at some point this year, put a 75% chance odds we at least touch 1840-ish. But to get there, you have to go through certain spots, which is why I also, put the chart out last Wednesday, Thursday, saying, if the bears start off strong, they're going to, slice 2020, and then the next real confirmation is a strong, potent close below 1990, and we've been hovering around there. So anyway, let's just go to some of the charts. You go to the SPX, you'll see this is like a long-term chart. So I want to show you since 2012. Let's see if we can draw this trend line like this. Basically, this trend has been broken. The rally that started back here. I remember I've done this actual, in the end of 2011. I've done this. This actually presentation talking about the red dog reversal here that led to another rally has gone on for 3 years besides the one before then. And now we've been on the right side of this trend line. If you also look during the course of this 2012 move, or the 3-year move, look how we've been above the 200-day. Above the 200-day except for a V bottom here, and then above the 200-day for what was that, the volatility that hit this summer. Okay, now at this point, we're like hovering around it and back below it, which is it looks more unhealthy than, how far above it we were for the time period when there was a lot of momentum. So some guys are, again, calling for this rounding top, and it definitely looks as if, it could be somewhat in the cards. Just again, talking macro, and then I'll get to micro. If you go to, I guess, this, pivot low, and you go across, we're not quite here, okay? There's a big support going across at around 1840-ish, and then you have this, more macro pattern ever since the 2009 low trend. So, you have accelerated trends, you have intermediate trends, and you have macro trends. So this intermediate trend is somewhat broken. That's why things have changed, besides being below the 821 day. And then here is the more macro trend, which at this point I don't know if we see, but it would you would think that we get something in this nature this year, and then that would actually put together like a head and shoulders pattern with the left shoulder, a head and a right shoulder, but then this would be, real big support. But I don't want to think that far, because we need to make money every day. So let's go to the short term. Short term, you take a look here at the SPX, and you're not really seeing anything so great. You're seeing a series of lower highs. Then this is how we closed the year, and now we've had 3 down days with a little inside day yesterday, and I didn't feel like we capitulated. It didn't feel like there was heavy fear. All there was a strict selling to the downside, whereas now we're below, again, all these moving averages. And if you put it in perspective, where the S&P is, all we really are is in halfway in between the range of the September-October double bottom. So it feels a lot worse than it is maybe to me. I don't know if it's to you, but to me it feels not so great. Maybe because I haven't been taking advantage of the short side, and anyway, this is where we are. So at this point, you have the low here of 1979. Kind of comes into a level here where it would make sense, to try and bounce, but it doesn't have to. And then, if it were to stay below these moving averages and rallies fail, you would think you get a move back to here. I know a lot of us have been waiting for a quicker move down to this spot, which would have been cleaner, but still just taking its time. You go to the spiders, okay, lots of different holes. At this point, still, it feels so weak out there, but look where we are, in relative, to the summer. We're really, nowhere to the downside. Here is your low, here is your higher low, and then this is the spot that was taken out in October, and now we're just kind of, it's been hard here, okay? You have a big hole still, blaring at most technicians out there that sometimes these, holes get filled before going. That's why I think a lot of us were thinking maybe a little bit more long before then, but then if it doesn't fill those, chances are, this continuation to the downside. And still, this, unopened gap hasn't been tested or even filled. So that's something we've been talking about ever since here. So anyway, these 3 days, it have been kind of hard because you think about it, if you didn't go home short into the new year, it was hard for you to make money, right? Because what we opened down 350, went down 450, and closed down 350. So you basically had to, you couldn't short intraday, or you had to be perfect. And then yesterday we had a little bit of an up day, so you had to actually just short the close, because today we opened up on our lows, rallied up, and then it was back and forth all day. So unless you've been thinking I'm just going to be short, which a lot of people who've traded bear markets say you have to just sell strength and keep your thesis, and a lot of guys got blown up doing that in 2013 or 2014 or 2012. Now they're doing it, and maybe this time it's their year to have more success. And there still were things to do if you came in flat. Unfortunately, if you had a few longs on, thinking that maybe we go up a little bit more today before heading lower, it was pretty painful on that type of crazy open. So let's go back to the chart. Here again, is where we're at. This is where the gap is, and then the oscillator is like minus 45. So, who knows? This is the first night I'm not really long anything, so we might get a bounce. I hate to think that way, but then just kind of sort of kidding. Here again is the top end of the range. We're through the middle end somewhat, and then here is another spot. You look at sectors. IWM, has been the weakest, and it's the first sector, to get somewhat close to the 2016 lows. So be careful buying that, even though it's oversold. If we were to make a move lower, whether it's this week or in a few weeks, this will be probably one of the first sectors to get below the 2016 low. It's been horrible ever since really breaking, this ascending channel, then getting below the 200-day right there. It's just been a sell. Broke here, retested, boom. Bear flag, gap lower. Now that's where it's at. Obviously, I know guys are like, whoa, the XLE is below 2016 lows, but that's really been the problem spot. So at this point, is it a trap? You can't play it like it's a trap. You just have to know that there's that much weakness. And people say, how did this happen? How did you know these companies had so much money? ExxonMobil, Sunoco, Exxon, et cetera, just to show you how it can happen and how you could avoid it. Again, here's a trend line that was broken. Here was your upper momentum trend line broken, and there was a 200-day. Okay, the 200-day was broken, never reclaimed it. That's why I'm trying to show you the importance of that, even with the S&P, because things do happen, and it never reclaimed it, and it's been in a downtrend ever since. If you get out of the energy stocks when institutions get out, you don't sit like that. If you get out when momentum guys get out, even better. But I'm just saying, it's been below the 200-day for that whole time period, besides when it was above it, besides these little brief stints. These little brief stints, again, follows the rule only, a few days below, no big deal, it's a trap, comes back above it, continues, but gets below it, stays below it, there's real selling. So we'll have to see if, that's the case for the S&P this time around. It hasn't been for 6.5 years. But yeah, Fisher saying that they front-loaded the gains, or they front-loaded the rally to make sure that it was fast and fierce to create the wealth effect, and there's now no more QE, so there's no artificial buying, and granted they'll be accommodative somewhat, but still the bid's not there, and fear begets fear. And at this point, again, you've had such a big move, and you're getting economic numbers that aren't great. You're getting China that's probably slowing below 6%. You're getting so many things showing no growth, and oil at 11-year lows. Something's got to give, and it feels at this point maybe it's the market. So I just want you to be a bit more careful from an active cash flow type of scenario. If you're my age and you're going to be putting money in for the next 20 years every single month, close your eyes and keep doing it, keep putting it in your 401k, you'll probably be fine. But that's in a whole nother time frame. So what happened today as far as high beta, I talked about, in my note that maybe Netflix goes green. Wasn't really expecting Reed to come out and say all his bullish statements and for the stock to pop the way it did. But it also was one of the strongest stocks on the board, the first to go green. And the reason why we love gaps is sometimes it gets in there and pushes through and just squeezes all the way up. So now is this going to be helpful for high beta? Because if anyone else is short high beta, will they get worried that this kind of thing can happen? Maybe. Is it above the 200-day, which is still constructive? Yes. You didn't have to be long coming into today to make money today. It was the first thing that went green. You had a few different spots to do it, and and I think some guys are still long it now. If you are, there was big volume and closed on the dead highs of the day. Good book would say take some. Last time you had a big potent day was here, and it went to highs. This is very strong. But again, maybe they stole from a few days worth of moves today, so just if you're in it, being a little less. Amazon, very wishy-washy today. Little green bar, but again, not that compelling. It's 200 days all the way down there. It had a breakout failure, and ever since, got sold down, broke the 50-day. Today there was a decent, negative to positive move, and then it got a little wishy-washy, still above, its earnings gap here and that prior high. So, at this point, I don't know if this was it, but look at how crazy these things are. I think Sperling and Lou made the majority of his money in the beginning of the day. Look at the first move, boom, to fill the gap. Okay, and then it rolled down and then came back up. So this was your easiest move. Showed relative strength, and then actually when the futures continued higher, it didn't go, and then it rolled down. Stock that did the same type of thing, early on, there were a few of them. Like look what happened here with Amazon. Quick move up, sideways action, rolled over. Okay, you go to Netflix with the same kind of thing. Quick move up. Okay, so that was your gap fill. Held, pushed to new highs into the 12 o'clock. Did Amazon push to new highs into 12 o'clock? No. It never got above this area. So it showed more relative strength in Netflix than Amazon. Go back to Netflix. This is where at 12 o'clock it was all the way up here. So it showed you some strength, pulled in, and then never got below the 21-day on the the 5-minute or the 3-minute. So that was a strong trend. But again, quick move up, held and went. A few others tried to have quick moves and didn't hold up. LinkedIn had a quick move, didn't hold up. Some other stocks, quick move. You take it, and if they hold up, you get back to it a little bit more. So anyway, Google, what did you do? Google took its time to get up there. Google had its first move sideways, pushed through the gap, and then did a whole lot of nothing. So Netflix was really the only one that had an extra push. Okay, but you had some decent. You had a first push, and you had a few different gap fills. So even in a weak tape, there are still ways to make money. First push, held the majority of it, went green, and pushed a little bit higher, and then you got to sell those things, unfortunately. And then it did a whole lot of nothing. So these are the type of moves that could make your entire day, and then hopefully you don't get chopped up during the rest of the time. Facebook did the same thing. Facebook, beginning of the day, first move up, and then I actually, I was a little shorted, thinking it would play downside catch-up, and then here is where, I got a little long, and then, it went to here, and that was the trade. I got away from it, and then, pushed up higher too. So, there was a decent, 80-minute move in this stock above the 8-day, and then once it broke the 8-day on the 3-minute, it started to get wishy-washy. And then you obviously had the short below here, and then it came back above, and this was your cleanest move. This is when you showed, they came after high beta, showed some relative strength. First move up, bull flag, continuation, that's a gap fill that could make you money every single day in big gap downs if you're not caught in it. Or if you're only in a little bit, you could add to it and trade out of it, hopefully. One thing that didn't do that was Apple. Look at the opposite. Apple filled its gap, didn't push up, came in, wedged, and then broke it to the downside. And before testing 100 a few times, couldn't break below it, and now we'll see what it does from there. You go to the daily chart and just to look how broken Apple is. It's pretty damn broken. This has been broken ever since, breaking the trend line right here. Pretty harsh trend line break. Boom. And then it broke. Remember we talked about 105.50? That was right here. and now it's kind of in no man's land playing with par. And then this, in my opinion, is going to be tested at some point, but we'll see when. Some people are saying that this head and shoulders top pattern just triggered. I think it triggered well before. They're saying left shoulder, head, right shoulder. I was thinking this could be, actually, I guess this is more of the neckline versus what I was thinking. But, you had this inside wedge on the right shoulder. Sometimes it's really good when you have an inside wedge on the right shoulder, so you have at least a point of reference to get potentially out, which I was long in here and got out. Didn't get short, or you get short there. And now we'll see, if this is the destination here or not. Right now it's a bit oversold, just like the market. So we'll see what happens tomorrow. The banks really couldn't rally, and it is what it is. 4 down days. Do you press short here? I don't think it's a good idea. Are the oscillators oversold? Yes. If you didn't buy the last 3-4 days and you bought a little bit on the close, you probably have a decent way of trading around it. From this point, we're coming into some bigger support. But overall, I think the landscape this year is showing a lot more negative signs than positive signs, and that started last year. Does it continue? Maybe. Does the playbook that we followed the last 6.5 years, where you could buy high and sell higher sometimes, and stocks make 52-week highs, and you could hold a portfolio approach? Will we see that again at some point this year? Maybe, for pockets, but I think it's more of a be very tactical, take your trades, look for red dog reversals in the hole, so this way you're buying it down, versus a level, so you have an out, and then if it pushes back above it and squeezes like it did today in the spiders for a point, you sell some, make sure to book it, and then you hold some just in case it builds. But in a very weak environment, it's not going to build, so don't give back your whole day. Let me show you with the spiders real quickly. Spiders, you go back to the 5-minute to show you how the red dog reversal is pretty quick here. You had this pivot. Let's go to the 5-minute. Okay, here it is. Yeah, this pivot right here. Where is it? Let's go to the 3-minute then. So I don't think the 1 minute even. So 198.50 was the pivot. Okay. This is only showing the end of the day. Okay, let's go to. Okay, here it is. 198.50 was the real pivot. Let's get this out of the way. Why was 198.50 the pivot? Just to teach a little bit. That was the low from. Let's go to the daily real quick. From Monday. Okay, Monday pivot right there is 198.50 right there. So that was the spot below it, stays below it, be out of the way, gets back above it, maybe it squeezes. So 198.50. So in the first, if you weren't long, again, it was easier if you weren't long. In the first 40 minutes of the day, you had a decent trade. So let's get to that. Here was, here was the open in the hole. Below it, played with it, gave you a quick move to, what is this? This is almost 199.50. So once it got above it, if you put your stop there, there was a nice clean trade all the way up to almost 200 even. Okay, and then from there, you had an ascending channel here where it finally broke below right there. So it broke the first 2-hour trend. So with that being said, let me just see something. Sorry, I had to see something. Anyway, so this was the, besides crossing the first, opening range, because a lot of guys who day trade, they look at the opening 5 to 15-minute range. So basically, here it was. Let's get a little closer look even. It's a little bit easier. Sorry. So, might as well. I missed my 4:45 ferry, so I'll do a little teaching. Here was your open down. This was your range print, which was 198. What is the higher? 198.73. So first thing first, rallied up, fell down on this wide range bar. You might have bought a little bit versus to close. Okay, then added through this whatever this was. It could have been a 10-minute high, because I remember getting long right here. You had yourself a trade for about 40 cents. Then it held above that range going sideways. Then it cleared, okay, that pivot, the one. What was this one? This one, so that cleared that 198.65 area, and then wound up giving you a trade to, what was this? This is 199.30, so that's about 80 cents above, and then it did go as high as almost 200. So this was $1.40 above where it cleared the opening range. So if you bought here and sold some there, and then was in tier 1 and then got back to tier 2 here, maybe got back to tier 1 there, and then it wound up going all the way up to here before breaking this little trend here. Oh, actually, no, sorry. Yeah, before, held the trend. This is where basically you could have used your stop, I guess, which was a little closer to 12 o'clock. So the first opening trade, was a pretty decent trending move to the upside. You could have used the first 15-minute high as your entry, and then you could have used this 198.60, which it played with a little bit for an entry to make some money, which it then tested, and then all of a sudden 200, was a sell some, and then get out here when the ascending channel here broke. So I don't usually do that. It's like a on a 3-minute or a 1-minute or a 5-minute chart. That's how you can go about making cash flow if you come in flat, into a gap down. You see where the opening print is. It trades off of it. Tests it, comes back above. You buy Versad, trades through the 15-minute range. You could nibble a little bit more there. You get a push. You sell some, and then if it gets above the RDR pivot, which was the 2-day ago low, you add some a little bit there. You sell some into the push because that's when some shorts get squeezed. Holds above it, and then trends. You pick your spot and you sell some, and hopefully, it builds. Today it didn't build. It was more rangy, but there was something there with that tactic. And then a lot of guys probably did the H sell tactic. Let me go back to that because some people are like, oh, Redler, what's the H sell tactic? Okay, boom. You go to the chart. Again, you have a big gap down right there, and then it rallies up instead of what's it called? Pressing here, wait for the rally to come up, doesn't get into the gap. You see some weakness in oil. You see some weakness around. Comes off the pivot. Maybe you short versus high, or maybe right here you short versus that high. And so I'm going to short because just rallied, $2 off the lows. And I just think because it came down 3 days, it was a little bit of a bounce. It probably rolls down. And then this is your short. So this way you're not shorting when it makes new lows. Everyone loves to short when it makes new lows, but why not have a better average cost? Shorting the bounce for the H, which is the pole, sell setup. And then so you could have tried it here, and then you probably got stopped out. You could have tried it here versus there. You might have got stopped out. And then this time, you made your money because it finally broke and then got below the 21 days. So this could have been short number 1, and then it wasn't easy. But it never, went back above that, right? If that was your stop, it never went back above it. And then kept trending if you just sat. And then, it made a new low, but obviously not by much. So here is when you add to the bottom of the H. So if you shorted the rally, comes back to the bottom of the H. So if you were in tier 1 short, which we talked about here versus there, okay, you're still in tier 1. And then when it either broke this support, that could have been your tier 2, or when it broke this support, which was the morning low, that could have been your tier 2. But if you waited the entire day just for this spot to break through a prior low, it was definitely not the easiest thing to make money. It still went down another, whatever that was, 60, 70 cents, but wouldn't it be better if you felt good in the money and then shorted there, covered there, and then maybe said, oh, if it gets back above the morning low, I'm out. And then that was that trade. So that's, the H sell setup where you short into the H, rolls down, you add when it breaks the bottom of the morning low, you get a little momentum, which happened here. And then, so, tier 1, or maybe this was your tier 1, tier 2, back to tier 1, and then maybe, covered it and said, I don't want to get caught in the last 30-minute short squeeze. So, that's kind of the tactical way to use a red dog reversal in the hole in the first part of the day. And then, if you bounce up, get a rally, short the rally, versus the level just in case it doesn't fill the gap and weakness persists and the advanced decline is horrendous and there's no real leadership, et cetera, et cetera. And then you short into strength and then it breaks that morning low. You add some, get new lows, you cover some, and then you trail it. So both ways, 2 ways to skin a cat without taking that much risk. You could probably do that in any stock, in any sector, and that's what the red dog reversal is, and that's also what the H sell setup is, and that's a tactic that could be used during a volatile time like this if you don't want to make big bets overnight. And that's it. A little tired today. Hasn't been a great week for me. Unfortunately, I've been writing a little bit better than executing, and hopefully I'll get them in line and then start progressing and be able to have good days and bad days, not depending on what the market does. And That's a wrap, Jack. See you tomorrow morning. Have a good night.